Hello, welcome to European Open Briefing for Tuesday, November the 13th. I'm Rafael John, currency analyst at XM.com, and we're going to be having a look at what's happening in the currency markets today. We're seeing a bit of an improvement in risk appetite this morning. The main trigger for that were reports that a top Chinese trade negotiator is on his way to Washington to meet US officials ahead of that all-important meeting between President Trump and President Xi at the G20 summit later this month. This is boosting equities. We saw most Asian indices ending the day higher, except in Japan, where we saw a big drop. In Europe, we're now seeing a positive start. On Wall Street yesterday, we saw sharp losses. Stocks there were mainly dragged lower by Apple and Apple suppliers on speculation of slow demand for iPhones, which weighed broadly on technology stocks. But the risk sentiment is boosting the Australian dollar, which is trading close to 0.72 handle. The Kiwi also benefiting up by around 0.4% at 0.6737 at the moment. The dollar holding close to yesterday's 16 months highest. Dollar index trading around 97.50 and dollar yen climbing back above the 114 level as the yen weakens slightly on those easing trade tensions between the US and China. Having a look at what's happening to the major European currencies, the euro and the pound recovering slightly from yesterday's lows. The euro, though, could struggle to make much progress as we've got that important deadline for Italy to submit a revised budget. A pound, as always, being very sensitive to Brexit headlines. We're seeing once again some hopes that a deal could still be reached within the coming days. The Canadian dollar is marginally higher against the US dollar at 1.3235. It was helped yesterday by a brief rebound in oil prices, but now we're seeing oil prices retreat sharply after President Trump tweeted that OPEC should not be cutting output. So let's now take a look at the major movers and that Trump tweet sending oil prices to the bottom of the chart. At the top, we've got the pound, followed by the Kiwi and the Aussie, as well as Euro Yen making a bit of a rebound there as well. Taking a closer look now at the dollar index, we can see dollar index holding very much close to yesterday's highs. So the dollar is now remains the favorite currency amid all the political troubles in Europe. We've got a slowing global economy and those ongoing US-China trade tensions, and of course expectations of more Fed rate hikes. We've got a number of Fed speakers this week, and all of them so far are indicating further gradual rate increases, but the dollar may struggle to stay so strong if we see even sharper sell-off on Wall Street, so a bigger a retreat in US stocks could eventually weigh on the US dollar. And also, if we do see more significant easing of trade tensions between the US and China, that could also potentially lead to a somewhat weaker US dollar. Let's now see what's happening to the euro, because the currency will be in focus today, as we've got that deadline for Italy to submit a revised budget. All the indications are so far that Italy will likely just lower slightly its GDP forecasts and make some adjustments to maintain the fiscal deficit target at 2.4%. This is unlikely to impress the EU, so this will probably drag on for some time, and we could see the euro making an even lower low following yesterday's 16.5 months trough of $1.1213. And the pound isn't doing that much better. We can see that yesterday sterling fell to 1.5 week low, 1.2825. It did recover above the 1.29 level on reports that Michel Barnier has said that the parameters of a possible agreement are very largely defined, and that the UK Prime Minister will present those parameters to her cabinet today. This was denied, though, by the UK government, and yesterday there was a speech by Theresa May at a at a dinner where she said that negotiations for our departure are now in the end game, but that there are still significant issues to be resolved. So that sent the pound back down again, closer to around 1.2840. Though there are still hopes that a deal could still be reached within the coming days. But Wednesday is probably the latest when the EU and the UK have to strike a deal if there is to be a special Brexit summit by the end of November. In the meantime, we're going to have plenty of UK data coming up this week, starting with job numbers very shortly, followed by the German economic sentiment index, and then later, early tomorrow morning, we're going to have Japanese GDP numbers. That's it from me. Thank you very much for watching, and have a great day.